The killing today, even if the initial investors in Birkenstock did not, as Jess just mentioned, stock not doing so well on its opening day. But the brothers walking away with $3.5 billion payout, and I looked at to be a pretty good payoff on this bet for them to hand over control of the company back to the private equity firm El Cateran back in 2021. So looking to be a pretty good day for those guys.
Yeah, I thought it was interesting too about how they've kind of walked away, right? I mean, obviously I know they still have, a couple of them still have stakes, but one of the brothers is basically completely out, according to our reporting. So kind of interesting that they've decided just maybe to move on and take the money. And that's a lot of money. And I guess they can use that, Katie Greifeld, to get into Disneyland, because, which I've told is a lot more expensive these days.
You made my segue for me. I just want to add that apparently Birkenstock is older than America.
Can you stop that? Who said this?
Billy Lipschultz told us that. We haven't fact-checked it, but it's very interesting. I trust him. Okay. I don't know. He was wearing a sweater.
He's great. I love Bailey.
Let's talk about the House of Mouse, because it's getting more expensive to enter it. If you look at Walt Disney World in Florida, annual pass prices are increasing by up to 10%. Meanwhile, a single ticket at the California resort on its most popular days now costs $194. That is an 8.4% increase. Also, parking is going up as well. And this is interesting. It's a touchy subject for Disney. Remember that CEO Bob Iger said earlier this year that the company had been too aggressive in raising park prices. Obviously, maybe a little bit of a reversal today.
Yeah, I mean, look, I mean, anyone who's been to Disney World or Disneyland or any other Disney properties know that, you know, you better bring your wallet and it better be full. So I guess this isn't that much of a surprise. And if you are a fan, I don't know, does a 9% increase really deter you from going?
I mean, I might still go. You know, I know I've got a wedding out in LA later this month. Disneyland's usually a pretty good time. Yeah, I mean, it's obviously, like, I think the allure for the park is still going to be there. But like you said, Romaine, I mean, this is not a cheap day, especially when you've got the kids to entertain and wait in the line. So, I mean, Jess, what are your thoughts on this?
I mean, what about Universal Studios? Or, hey, I mean, Matt Miller always brings up Six Flags to me, too, and tries to get me to name.
Can we just be clear, too, that a lot of reasons why people pay this is because they have little children who demand to go to Disney World, and you're always going to please your kids. I don't know. My kid was little. I never heard him say, "Oh, let's go to Universal Studios," or to, you know, I don't know. I don't know what else is out there.
I'm not saying it's better. I like all of them.
Before we go, can I just point out here, 1774, Birkenstock was founded, according to the internet. Oh. And as we know, the United States, last time I checked, was 1776.
Could you check that again?
According to the internet.
So they beat us by 2 years.
All right.
I don't know, who's better, the United States or Birkenstock?
It's a difficult question.
Oh, wait, don't answer that, actually.
Beyond the scope of this simulcast.
All right, guys. Well, that's going to have to do it for now. But we'll be back together in about an hour on live TV, radio, and, of course, YouTube, and on Bloomberg Quick Take at 4 p.m. for our Beyond the Bell coverage when we take you through today's market close. The Fed minutes, but we also got an update on those producer prices, some of that coming a little bit stronger than expected. But looking at the movement here in the stock market, a little bit mixed on the back of that, but you are looking at yields coming in a little bit lower here. And obviously traders looking ahead to, of course, CPI coming out on Thursday morning, and to really solidify those expectations about what the path forward is when it comes to monetary policy and the Federal Reserve, as well as when it comes to corporate margins. And so speaking of those PPI prices, the Labor Department did report that prices paid by producers rose at a faster than expected pace last month. So with more on the economic backdrop and the U.S. market trade, with us, Michael McKee, international economics and policy correspondent at Bloomberg News, joining us from our Washington, D.C. bureau, along with Liz McCormick, chief correspondent for global macro markets at Bloomberg News on Zoom from New Jersey. First up, Mike, I want to start with you. Walk us through the Fed minutes, and what is your biggest takeaway, particularly because they are a bit backward-looking, right?
Yeah, they're absolutely backward-looking and quite a bit stale at this point. But we knew that the Fed had agreed, at least among the voters unanimously, that they should hold rates at the September meeting. But in this case, what we're trying to do is divine what they're doing forward. And not all of them agreed that they needed to raise rates in the future, and not all of them agreed that the economy was slowing enough. And so there was a division that was evident in these minutes. I don't think it's a surprise to anybody because we've heard from Fed officials since then, some of them who think they do need to do one more move and some that think they could hold. So it doesn't really tell us a whole lot. A lot of people are glomming on to the phrase proceed cautiously. That kind of is sort of obvious. That's what they would want to do at this point. It's something Jay Powell has said a lot. So I don't think they particularly give us any guidance about what's going to happen on November 1st. For that, we look to the data.
Sorry, excuse me, Liz. I want to bring you in here.
So is that blue button, right?
Yeah, where is that button? I got you, Liz. You should be able to hear me now. Liz, I wanted to bring you in here to talk about the trade today. So, been a lot of movements in treasuries lately. Obviously, that surge, that took off a week or so ago when people were really starting to freak out about rates staying higher for longer. Then we got, maybe it's a bit of a pullback when some speakers were saying that maybe we're already done with rate hikes, plus the conflict in Israel really sparking a bit more of that rally in treasuries. Where are we at today?
Yeah, and first, Molly, shout out to the producer for that song, Minute by Minute. I forget who sang that.
Paul Brennan, props to him.
Yeah, I love that one. But I mean, the bond market is all over the place after Friday. Like you said, that blockbuster jobs report, they added to the upside. And now, like you said, unfortunately with the issue in Israel and the flight to quality bid, and then that kind of corral of Fed speakers I feel like the first time there was such a strong flag to, hey, maybe the rise in bond yields are doing some of the work for us. So that together kind of brought a wave of, some short covering and just people buying. But I would say the market is still not convinced. Like Mike said, the minutes left us where we were, a lot of uncertainty. We know they had penciled in another, hike this year in the dot plot, but things have changed a little. But inflation, let's see what CPI does. PPI was strong today. That didn't seem to kind of leave any lasting effect on the marketplace. But I think I'm hearing a lot of people saying, I'm cautious. Like some people are saying, the peak in yields is over. Like we've heard that movie before, right? So they're being cautious to say, the Fed is still data dependent, despite all the comments. They have to see it. If inflation starts moving the wrong way, the labor market stays strong, and the coming data we'll get on that through the next weeks. I mean, they might do that one more hike. So I think there's a lot to leave people kind of just saying, I'm going to sit in whatever position I have and not do anything.
Mike, I want to bring you back into this conversation. So with CPI coming out tomorrow morning, what's your kind of view on what we should be expecting to see from this number?
Oh, I'm kind of taking Liz's advice and just sitting here and not moving.
Oh, come on. You can't take it that easy.
I always listen to Liz.
We all do.
I think what we saw out of PPI today was kind of a index-specific situation. 9/10 of the rise in goods was in goods prices, and goods prices of that, most of it was energy. And we probably aren't going to see the same kind of energy rise in the CPI because gasoline didn't really move as much on a retail level as it did on a wholesale level. So if we come in with a CPI that's kind of about as expected, which is a small drop, it shows the momentum of inflation still slowing down, the Fed's still on the right track, then I think that probably convinces them they want to hold in November. But I would caution, we still have retail sales ahead, and then we will have spending and incomes and the PCE inflation at the end of the month. And the real question now seems to be whether or not consumers are going to continue to spend. The third quarter numbers seem very strong, but do we do that into the holiday season? A lot of economists think that we might see a real drop-off, in which case that would cement it. But if people keep spending and we keep getting job numbers like we got, then maybe the Fed will feel before the end of the year that they want to go once more.
We're going to get a little bit more insight onto that holiday travel later into the show. So very well could be, like you're saying here, Mike, a bit more consumer spending to round out the rest of the year here. But Liz, as we're just looking ahead, I mean, what do you think the next catalyst here is for treasuries? And especially, you know, we've been getting a lot of different conflicting Fed speak. You know, so you got Bowman today saying more rate hikes may be needed. Others are like, nah, I think we're good for now. So how are you trying to parse through all this?
Yeah, I think that's important, Molly, that people can't feel like the Fed's all on the same page. So I think, you know, I hate to say it because it's the same day of the Fed meeting. It's like almost 2 weeks away, but the bond market also is looking at, of course, the Fed meeting. But like Mike said, most people think they're probably staying pat, but we have another Treasury refunding where people are expecting another big dose of an increase in note and bond sales, which people are kind of scratching their heads. Everyone has their thesis, but a lot of people saying part of the rise in long rates is, you know, just investors demanding more of a premium for the risk in treasuries, in part because the deficit is high and, you know, more supply. So I'm looking for that. But I just think also, like Mike might have mentioned in kind of the synopsis on the minutes today, that, you know, we're going to start looking in the bond market to, like, even if they don't move again, like they did stress in the minutes that higher for longer, right? So we might get some rally in the bond market like we're seeing, but if you're going to have over 5% Fed rate for another, who knows, 9 months, that's pretty sticky. So I think that's what the bond market is going to try to do, the calculus on how higher for longer and how longer filters into what they should think bond prices should be at.
Hey, Mike, what about Supercore? Obviously something we all know Jerome Powell and his colleagues are keeping a close eye on when it comes to trying to gauge what wages look like in these services industries.
Well, it's basically service prices ex housing, because housing is such a big part of the CPI, and it has been very slow just because of the way the index is constructed, very slow to come down. So they're taking out housing and looking at the rest of service industry prices, which are largely driven by wages. And that has been slowing. It's been coming down, and we've seen evidence of that in other wage indicators. So it may be a fairly decent number for the Fed this time, and if so, it gives them a little more confidence that things are going well. If we did have a rise in energy prices, say gasoline prices went up more than the retail numbers that we get, then maybe it scares people a little bit more in the bond market, but Fed is going to look through that because there's nothing they can do about it. So I think the basic numbers are going to come in suggesting that inflation is still headed lower.
Just real quick here, Liz, in our last 30 seconds. Officials saying that rates should stay high for, quote, some time. How long is that?
Yeah, so the bond market has been playing around, you know, where they're pricing. I think the last I looked, it was just before mid next year, and it had been like pushed out to September on Friday with that jobs data. So they're flirting around, but it seems like I would say the consensus is you should at least be seeing cuts by next year in the second half, right? But that could move up. So we have to see. And, you know, I think that's going to be the next thing. The bond market has been so wrong on, let's just say, derivative traders and pricing in cuts before. So we maybe don't want to trust them. But I think, you know, at least by the second half is what the consensus feels now.
All right, we'll have to leave it there. Thanks so much to you both for joining us. Bloomberg News international economics and policy correspondent Michael McKee and Bloomberg News chief correspondent for global macro markets Liz McCormick on the Fed minutes and the outlook when it comes to CPI tomorrow.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg, and this update is brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. First day out for Birkenstock, and the shares are falling now by 11.7%. Birkenstock now at $40.62. Stocks have been fluctuating as traders wade through the minutes of the Fed's September meeting for clues on the policy outlook ahead of a key inflation report. Oil fell after an early week surge. West Texas Intermediate crude now down 2.3%, $83.99 a barrel. 10-year is yielding 4.58%, with a 2-year right now at 4.99%. S&P up 6, a gain there of 0.1%. The Dow is down 11, a decline there of just about 0.1%, while the Nasdaq Composite Index is up 51 points. That is a gain of 0.4%. Bottom line here, mixed markets, lots of moving parts to today's trading. Kara Murphy is Chief Investment Officer at Kestra Investment Management, and she told Bloomberg Markets this morning you definitely have to keep an eye on crude.
Often when we see a geopolitical event outside the U.S., the main transmission mechanism by which it starts to affect global markets is through oil, right? So we saw this particularly in Ukraine when Russia invaded, now conflict in the Middle East. And so I think that's the biggest immediate concern in terms of the impact on the U.S. economy. And so far, markets have really been largely shrugging it off.
And again, West Texas Intermediate crude down 2.3%, $83.99 a barrel. And you can hear more of that conversation on the Tate podcast. You can download it wherever you get your podcasts. The big energy story, and I mean big, ExxonMobil buying Pioneer Natural Resources for $59.5 billion, the supermajor's largest takeover in more than 2 decades as it seeks to become the dominant producer of shale oil. We got a lot more coming up on this major story from Bloomberg's Alex Steele and Fernando Valle of Bloomberg Intelligence coming up in just a moment right here on Bloomberg Business Week. Again, recapping, S&P up 7, up by 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. And holy moly, Molly, when you're thinking about this big oil deal that Charlie was just talking about, ExxonMobil agreeing to buy Pioneer Natural Resources for nearly $60 billion. So this would be the world's largest corporate takeover announced this year, as well as Exxon's largest takeover in more than 2 decades, as it does seek to become the dominant producer of shale oil. So M&A, of course, has been impacted by the higher rate environment as it does affect the cost of funding for a corporate takeover, but that clearly didn't stop this big oil deal, Molly. So Exxon CEO Darren Woods does say he expects to trim the annual cost by about $2 billion as it integrates the purchase of Pioneer. So here to discuss more with us, Alex Steele, Bloomberg Commodities Edge anchor at Bloomberg Television, on the phone from New York City, and Fernando Valle, senior oil and gas analyst at Bloomberg Intelligence, joining us on Zoom in New Jersey. We'll get to the news in just a minute, but first, let's listen in to Alex's interview with Exxon CEO Darren Woods and Pioneer CEO Scott Sheffield.
The world's going to continue to need oil and gas for some time to come. What society should be focused on are companies that can most effectively produce the oil and gas that society still needs. It's a win for the environment because as long as it's needed, you want the most responsible operators producing it. With this combination, we will be the most responsible operators with the lowest carbon intensity.
Alex, let's start with you first. You did interview both of these CEOs. What did they tell you as to why these companies did agree to combine?
So I kind of joked with Scott Sheffield because he has tried to retire before, and he came back. But this time it feels for real. In April, he said he was stepping down by the end of this year. So I have to wonder, how much of this is wrapped into it.
Right.
But from Darren Wood's side, it truly is having this massive technological powerhouse that you're able to bring now to a massive amount of shale rock in the U.S. I mean, he was talking about 4-mile laterals. Basically, that's a really, really, really long pipe horizontally in the ground. The max that people are doing right now in shale in the U.S. is 3 miles. And this is like an Exxon thing that they can bring to this rock that they desperately need.
So we saw, Fernando, that this is going to make Exxon the largest player in the Permian, this deal. What else stood out to you in terms of highlights as far as what's advantageous about the deal for both companies, maybe some other numbers that really caught your eye?
Absolutely. I think to Alex's point, it's part of the technology. We're a little dubious that they'll get to $2 billion, but maybe they will if that really pans out. But also it's the integration downstream with this new rock that Alex is talking about. Remember that Exxon has a significant presence in the Houston area with their refineries, carbon capture as well that they're establishing now. So that's how Darren can get to that more responsible oil company, more responsible oil that you mentioned in Alex's interview. And the other point is you guys talked about cost of capital not impacting. I think quite the contrary. It makes Exxon the preferred destination. Again, from Alex's interview, Scott Sheffield said it was the most attractive equity out of all the majors in his view. And because they have that AA rating and they are such a large player that can develop this rock at a very cost competitive basis.
Well, just to follow up on that quickly, Fernando, because I noticed this is an all stock deal. So maybe then you're not dealing as much if you were to have a cash funded portion that you'd have to tap debt markets. And so is that maybe playing in a little bit there in terms of the cost of financing?
Exactly. So all equity deal. And then importantly, Pioneer now is expected to generate about $4.5 billion in free cash flow in 2024. And the dividend burden from the shares issued by Exxon to buy it, it's only about $2.1 billion. So they actually get some extra free cash flow out of that they can use to either do more buybacks or continue to grow at a faster pace.
Hey, Alex, I want to bring you back into this conversation. Exxon has been on the lookout for acquisitions in the Permian Basin for years, but really struggled with the timing. Why is that?
Yeah, I think you're referring to a 2010 acquisition of XTO Energy, which basically called the peak in gas prices right after they bought it. This was really their first jump into shale and with a gas play at that point. Gas prices totally cratered, and they admit it. They're like, this was a terrible, terrible price and a terrible, terrible acquisition. This one feels a little different in that they're already in the basin. This is not a new thing for them. And this is really about leveraging their existing technology to get more oil out of something that's already proven and that's already there. Now, you might argue, well, if you're going to get more oil out more efficiently, does that actually lead to more production, which in essence means a lower price? True. But a lot of this oil and this acreage that Pioneer is bringing to this deal, you can still get 10% return on sub 50 oil. So it's okay as long as you don't crater oil at the same time. And it looks like the price band for oil in that marginal barrel has kind of moved up from 60 to maybe 80. So it gives them a lot of wiggle room at that point.
So Fernando, you were just saying that you're skeptical of this $2 billion. I assume you meant that was the estimated cost savings, right? That's what the Exxon CEO says is going to be possible from this deal. And that's something, CEOs love to talk about that during
Right.
M&A. I'm sure Jess knows this better than anyone. They love to talk about expected cost savings, those synergies. That's a big word.
Synergies.
Love a good synergy. So Fernando, tell us, why are you skeptical?
All right, so about half of those synergies are actually that improved technology, the recovery factor improving, and that's been a difficult battle for most oil companies, including Pioneer. The efficiency ratings on most shale wells has kind of plateaued over the past couple of years. So Exxon would have to bring something truly new, and maybe those 4-mile laterals would do it. But it's a prove to me story as opposed to take it at its word, because to date the cube technology that Exxon has touted hasn't really panned out for most of its peers. So we wait to see if they can actually get that improved recovery that's about half of those synergies.
Hey, Alex, what issues, if any, could arise that could make this transaction potentially fall apart?
Oh, man. I mean, lots of them. I just don't know if it's actually going to happen. I mean, you could have another major come in and kind of swoop in to buy it, but I find that to be highly doubtful. So Conoco, I don't think, would make this kind of big acquisition. Chevron's still absorbing some of its shale acquisitions. Oxy is really still integrating Anadarko at this point. So it doesn't feel like anyone's going to step in. The other part is regulatory. Now, technically, I guess you could make a say that, like, hey, this is a lot of Permian Basin with 15% of production in the Permian now. But there are just so many small players in there that it's hard to make that antitrust case. In addition to the fact, why would you block an oil merger that could unleash more oil when the U.S. is talking about needing more oil? I get it from like a green perspective, maybe, but it's going to be really difficult to make that case rather than looking to the Saudis or Iran or Venezuela for more oil.
Yeah, last one here, Fernando, just in our last 30 seconds here. Tell us a little bit about, we've got a lot of oil price moves lately between, the interest rate environment and the conflict in Israel. Can you tie that into this deal a little bit right here and how that matters?
I think in the short term, we're a little worried about demand because the high prices are impacting how much fuel we are consuming globally. But then in the longer term, as Darren alluded in the interview, there's been an underinvestment in the industry, and we see a higher price, which I think is why Exxon stepped into Pioneer now. It's a good timing for them to buy undeveloped acreage that they can then sell at a much higher price later.
Hey, Alex, we only have about 20 seconds left, but what was the most surprising takeaway from your interview with both of the CEOs?
Actually, how excited Darren was. I mean, he's pretty much like a typical, Exxon CEO. He's like by the book, right? He's going to say the things. He seemed actually genuinely excited about it, and I was not expecting that, to be honest with you, which means that there could be just more fun things coming out of this merger to come.
Right. Thanks so much for both of you joining us. Alex Steele, Bloomberg Commodities Edge anchor at Bloomberg Television, and Fernando Valle, senior oil and gas analyst at Bloomberg Intelligence. We'll have more coming up, but first, let's get a check on the latest world and national news with Nancy Lyons in Washington, D.C.
Thanks, Jess. Secretary of State Antony Blinken is on his way to Israel, where he says he'll reiterate U.S. support for the country as it wages war with Hamas. He says there are several reasons for his visit.
We anticipate there'll be further needs, further requests. We've already been working closely with Congress on this, and we look forward to continuing to do that to make sure that Israel has what it needs. Second, we will be reaffirming the very strong message that President Biden has delivered to any country or any party that might try to take advantage of this situation. And that message is don't.
Blinken says he'll also be working to learn more about efforts to rescue any hostages, which include Americans. That's certainly something that's on top of mind for Congressman Michael McCall, chair of the House Foreign Relations Committee.
We don't have a definitive answer, but we know about 20 Americans are missing, and we don't know where they are. I would speculate, and I normally don't, but I'm sure we have hostages now in the Gaza. And I think getting those Americans out is our number one priority.
McCall spoke earlier on Bloomberg Sound On. Well, there is some progress in the House, where behind closed doors, House Republicans chose Majority Leader Steve Scalise as their party's nominee to be Speaker. A floor vote is not expected until tomorrow at the earliest. The Louisiana Republicans still must win a majority vote from the full House in order to win the gavel, and it's not clear yet if he has those votes. The Psyche spacecraft is being prepared for launch tomorrow from the Kennedy Space Center. It'll be heading to a far-off, metal-rich asteroid in search of clues to the origin of planets like Earth. And you've heard about the Ozempic effect on appetites and diabetes. Well, now a new study of the Novo Nordisk drug shows surprisingly early effectiveness against kidney disease. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yes, 3:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, and NASDAQ, they are all higher right now. Lots of moving parts to today's trading. A flopped IPO, mega energy deal, Fed minutes, and lots of economic data. Let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Sean. That's right. U.S. stocks in the green in a choppy session. The Dow's currently up 35 points. S&Ps are higher by 15, while the NASDAQ is up by 0.6%. The U.S. 10-year yield at 4.58%. Gold is higher by 13. Oil is under pressure. And Bitcoin is down by 2.6%. Among the main 11 S&P sectors, leaders were real estate and the utilities. Energy and consumer staples were under pressure. And leaders to the upside in the Dow, Amgen and Walgreens, while Procter & Gamble and J&J led to the downside. You mentioned deals. Exxon is buying Pioneer Natural for $60 billion, while Brinks said they were not in talks about a possible transaction with NCR. Regarding that IPO, Birkenstock opened at 41. The IPO was at 46. And in other news, Goldman Sachs struck a deal to sell GreenSky. The Fed said that all agreed rates should stay restrictive for some time. And wrapping things up, Eli Lilly traded to an all-time high, topping $607 a share. Live from the first word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Certainly got it all covered. And to hear live breaking news over your Bloomberg, type Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Chessman and Smalley Smith here for Carol Massar and Tim Stenovic in the Bloomberg Interactive Broker Studio. We have just under 20 minutes left to go before the closing bell. Checking in on the S&P 500, up about 0.3%, trading around 43.72. Now, diving into today's price action in the markets, joining us here, Jim Gold, co-founder and chief executive officer from Steward Partners, joining us in the Bloomberg Interactive Broker Studio. And you were just talking to me about how when you were a financial advisor in the 1990s, something that really struck you, especially during complicated times, and there were a lot during that decade, about how kind of impatient a lot of clients would get when financial advisors would obviously position a certain way, and they were just eager for those kinds of strategies to play out. How do you view today's markets?
Yeah, I think it's a similar challenge, right? You think about asset allocation, and our advisors are folks who've been doing this for 2 or 3 decades, are certified, accredited, and you say, hey, we have asset allocation, and when fixed income doesn't do well, the equity markets will, and vice versa. And now the clients go, well, it looks like neither one of them are doing well, and that's true, right? So I think there's this impending recession that we're all talking about that seems to be out there but doesn't want to actually come to shore.
Right.
And so you're dealing with people's money, obviously it's an emotional thing. And I think when their days feel like weeks and weeks feel like months, where they're kind of going, well, okay, but you kept telling me this was going to happen. So they stay the course and they're going to be fine, but I think it can be challenging at times to keep them aligned with that.
Yeah, so how do you assure those people, Jim? Because like you said, this is sensitive. These are people's retirement savings, their whole life earnings here, and you're looking at a lot of red on the screen. So what do you tell people in the meantime? And, is there anywhere that you can really hide out and maybe get some green right now?
Right. Yeah, I think, listen, you have to, I think being a financial advisor, you're really a counselor, right? And the money is obviously the most critical piece of it. Most of our folks have been working with their clients in some cases for decades, sometimes we're on to the 3rd generation. So they've lived through it enough, it truly becomes like a marriage where they say, hey, there's good times and bad, and we know these are the tough times, but you've always come through for us. I think it's also a time, though, where people do lose patience with their advisor, and it's usually a great time for, as an advisor, if you've done a great job and you have a loyal client base, the better producers actually grow dramatically during these times, because some advisors aren't picking up the phone when the client's calling to yell at them because the screen's red all the time.
Yeah. Well, especially because now if you look at the correlation between U.S. stocks and bonds, it's actually the most closely tied in about a quarter of a century. How much does this impact the 60-40 portfolio strategy?
I don't think it changes much. I think you have to stick with what's working, and I think the right clients with the portfolio are going to say, hey, look, I look at the screen as red, and I may be down, but I started with 4 million. I still have 7. Yes, at one point I had 9, and 9 felt better than 7, but we're going to get back to 9. So much tougher if you start at 9 and you're at 6, and you have this great plan that's clearly not working. So. Definitely episodic and challenging at times.
So Jess first asked you about how this environment feels similar to the 1990s, and we obviously had an early recession then, earlier in that decade. Had a few more since then. Obviously, the financial crisis, a big one of them, beginning of the COVID crisis. What other similarities, differences you see when you're looking at today's climate?
I think it's just the extraordinary extremes we're seeing, right? So in the 90s, you had this valuation lift that went through the roof, and every year, all the strategists will come out and justify why it should continue to go higher. And if you were a value investor, which I tended to be when I was an advisor, I was early in saying, I think this is a little bit absurd. And I always talk about having been a Smith-Barney guy. I think Sandy Weil said it best in the late 90s. He said something like 80% of all the tech companies today will be out of business in 10 years. But the 20% that are going to be left, they'd be worth more than all of them combined, right? So I think you're seeing that challenging time and trend. But I think it's the real jump in valuation. We've gone from 0% interest rates to where we are today, which I don't know if there's a time where it's risen that quickly in such a short period of time.
And speaking of those interest rates, not surprisingly, obviously that really impacts M&A activity. But what about in particular when you're looking at RIA M&A? What are you seeing there?
Yes, we have a corporate RIA. We're actually just ranked as the 19th largest in the world in less than 10 years. So what we're seeing is, and this and all the industry data supports this, is you're seeing a divergence, I think, of overall valuation to the upper end. So these sort of platform providers, 10 years ago, if you had a $2 or $3 billion RIA, that was a big firm. Now 10 billion is kind of the new 2 billion. And what you're seeing is, if you think about there are 15,000 RIAs today in the United States, is the largest number ever. 80% of them, or 12,000, are $500 million or less. So traditional deals have been, John is buying Jane's practice or Jane's buying John's practice, right, and they're financing that probably through a local bank or a smaller banking entity. Well, that drag of the cost of financing is meaningful now. So what you're seeing, and all the industry data supports it, is that the overall valuation hasn't come down. It's like saying, think of American real estate. You might go, well, Florida's still not going down, but other markets are coming down. So the overall valuation has not come down, but the real decline is on that under $500 million tier. And the ones that are actually increasing in size and valuation are the larger firms, which are the sort of $20 billion plus players. So volume's down a little bit. We're actually in front of a number of opportunities, but I think there's still an opportunity to grow it.
What do you think that tells us about the economy?
I don't know. It's a great question. You stumped me there.
Well, you were just mentioning, Jim, some of these opportunities you're eyeing. Maybe you can elaborate a little more there for us.
I think, listen, we're looking for opportunities. I think in the industry, look, you have a bunch of factors coming into play. I think you have increasing regulatory pressure, which is always out there, and you have to run a clean business and make sure you're doing the right thing by the clients. It's harder and harder to run the business. Now you think about technology and cybersecurity and operations, compliance, now economics and finance of your business. So what you're seeing is that trend, which is leading the smaller players to want to roll up into something bigger. We happen to benefit to be on the right side of that trade. I think the demographics are there as well, right? You see the average advisor age continues to go up every year, even though there's more and more, under 40 advisors coming in. It doesn't seem to pull the number down because you have this huge pool of sort of the advisor baby boomers, if you will, that just keep pushing that number higher.
We only have about 30 seconds left, but because this is Bloomberg, what do you think the Fed is up to next? Do you think the Fed's actually done from here, raising rates?
Listen, I'm a long-term trend guy. I think rates are obviously going to come down, and I think they're going to go up. I think they're going to go up before they come down, but I think we're going to see in a few years everything tends to revert back to the mean. I think the norm will come back in place. We're probably 24 months out from that.
All right, Jim Gold, co-founder and chief executive officer at Steward Partners, joining Molly Smith and myself here in the Bloomberg Interactive Brokers Studio. And I know, Molly, we only have about a little over 10 minutes left before the closing bell, but it's definitely going to be interesting on the back of getting those Fed minutes earlier, and then ahead of that CPI data, kind of how investors are making sense of all of this.
Oh, yeah. I mean, the eco trade drives every trade. So we got a lot to discuss coming up.
Yeah, we'll have more coming up. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. ExxonMobil down now by 3.8%. Pioneer Natural up 1.4%. ExxonMobil is buying Pioneer Natural Resources for $59.5 billion. The supermajor's largest takeover in more than 2 decades as it seeks to become the dominant producer of shale oil. Pioneer Natural Resources CEO Scott Sheffield explained the logic behind the deal.
We think long term, you have to become a diversified company. And the question is, do we do it ourselves or do we become part of a company like ExxonMobil? I really think Exxon has the best stock of all the diversified companies around the world, the best growth opportunities. And I think after this transaction that shale companies cannot survive on their own long term. They're going to have to merge up, consolidate, and be part of a diversified company is my general opinion. And this should happen over the next 5 years.
And again, Pioneer Natural up now by 1.5%. ExxonMobil, it is trading lower. We've got ExxonMobil shares down now by just about 3.5%. Disney raising ticket prices at its Disneyland resort by up to 9% and lifting annual pass prices at Walt Disney World by as much as 10%. British Airways has joined a growing list of airlines that have halted flights to Tel Aviv after a security incident forced one of its aircraft approaching the city to divert back to Heathrow. Shares, ADRs of British Airways down today by about 0.3%. Those are our top business stories. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
Justin and Molly Smith here in the Bloomberg Interactive Broker Studio. Of course, in for Carol Masser and Tim Stenivek today. We'll have more coming up, but first we're going to actually have Wendy Benjaminson from Bloomberg News. She's a senior editor here with an update on a potential vote for the new House Speaker. She's joining us on the phone from our D.C. bureau. And Wendy, of course, we saw those headlines on the terminal within the last few hours, how Republicans did vote to nominate Steve Scalise of Louisiana to be the next U.S. House Speaker. Walk us through the latest developments.
Sure, be happy to. Thanks for having me on. Well, they nominated Steve Scalise, and then in true congressional fashion, they went home for the day. So there is no vote this afternoon, and that is because even though the rival for the nomination, Jim Jordan, a congressman from Ohio, has offered to formally nominate Scalise and show unity among the Republican conference, there is enough doubt that Steve Scalise can reach the 217 votes needed to become Speaker, that they banged the gavel for the day and decided to do some backroom dealing and see what happens. Maybe tomorrow, maybe not. We're in a waiting pattern now to see.
So, Wendy, I'm sure it's probably anybody's best guess, but is there an estimate here of when we might know for sure who the next speaker will be?
I think there's some pressure, internal pressure on them, and of course external pressure to maybe wrap this up by the end of the week, hopefully before the weekend, because they cannot do anything while they don't have a speaker. There was talk of giving the acting speaker, Patrick McHenry, some extra powers so that they could get things done, but they want to speed aid to Israel. They want to solve the spending and budget crisis before the government shuts down on November 17th. And 100 other things that have to happen. I mean, there's a reason we have a House of Representatives, and there's a lot of work that needs to be done, and some of it very urgent. So I think they want to wrap this up, but there's always that faction that just likes to make trouble.
All right, Wendy Benjaminson joining us, Bloomberg News senior editor. She's going to keep us up to date on all these developments. We're continuing to monitor the potential vote for the new House Speaker in Washington. We'll have updates and, of course, breaking news as it develops. But coming up next, we're going to be joined by our Bloomberg TV team for our cross-platform coverage on TV, radio, and YouTube. So stay tuned. Bloomberg Beyond the Bell starts right now.
Nice.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell. You're here to all take us beyond the bell. It's a global simulcast with our friends Carol Massar and Tim Stenevik, who've decided to take the day off and instead have handed over the duties to Molly Smith and Jess Menton. How you guys doing?
We're having a blast over here. We do miss both of them, but we're still having a good time. But taking a look at, we only have, about 2 minutes left before this closing bell, but the S&P 500 is trading right now, still below those summer lows here. So it's going to be interesting how things shape up ahead of that CPI report tomorrow morning.
Yeah, and of course we got, the Fed minutes today to lead us into that that next CPI report a bit. So looks, still to be that same higher for longer narrative. We've heard it before. You'll hear it again. So not a whole lot of news coming out of the minutes today, but we've got a few more Fed speakers coming up too. So I'm sure they'll have more to weigh in on.
Yeah, the PPI report that we got this morning certainly backed up that higher for longer idea. Now everyone turns their attention to CPI and whether we actually get those numbers down to some meaningful disinflation that will continue.
Yeah, and the CPI report, we'll see what that delivers here. Of course, also earnings season is basically, I might as well just call it underway. Of course, we get Walgreens and Delta, I think, tomorrow morning, and a couple of the big banks on Friday as we head into the following week. And I think this is going to be one of those critical earnings seasons where people really want to see how these companies have held up to that inflationary pressure, whether they've been able to pass that cost on to the consumers the way they did in the first and second quarter. That appears to be waning already. The question is, how much is that going to weigh on margins? All right, we're getting the closing bells here in New York here on this Wednesday afternoon here. And it looks like a relatively good day. I think some investors will take it. A fourth straight day of gains for the Dow Jones Industrial Average, which is up about 0.2% here on the day as we wait for these numbers to settle. A similar story for the S&P 500, up almost 20 points or 0.4%. And the NASDAQ Composite higher by almost 100 points or 0.7%. 4 straight days of gains there for 3 of those major indices. Meanwhile, let's turn to the Russell 2000. That was your relative lag on the day. Remember, the Russell 2000 had put together 5 straight days of gains. There won't be a 6, down 0.1% here on the day. As you hear the clapping and the bells there, you see the CEO of Vivid Seats ringing the bell there at the NASDAQ. Actually going to be speaking to him, guys, in just a minute here on the close.
Looking at the daily advancers, about 60% of the stocks in the S&P 500 higher are about 296, and then 206 decliners there are about 41%, Scarlett.
Yeah, let's take a look at the best performing sectors and laggards as well. You've got real estate investment trusts and utilities, very interest rate sensitive groups taking the lead here, up by at least 1.7%. Chip makers also gaining by 1.4%. On the flip side, take a look at the big decliners here. Healthcare equipment and services index. I'll just say that's the Ozempic effect taking effect here in that sector. And energy stocks lower by 1.3% as oil prices continue to fall. Household and personal products, another defensive group, also losing 1%.
Well, speaking of what's happening with some of those healthcare stocks, Scarlett, looking at Eli Lilly, ticker symbol LLY, that stock up about 4.5%, so it's best day since August 8th earlier this year. So this did come after Danish drug maker Novo Nordisk did say late Tuesday that it was halting Ozempic's kidney disease treatment trial after a committee said that analysis showed signs of success. So even though that did hit shares of some of the world's biggest kidney dialysis providers, you are seeing some of these healthcare stocks like Eli Lilly rising. Also another one rising too, and also closing higher today is Amgen, ticker symbol AMGN, that's up about 4.6%. So best day also since August 4th. So looking at that biopharma stock, it was upgraded by Leerink to outperform there. So that's another one gaining. And then of course, Plug Power. We're actually going to have the CEO, Andy Marsh, who's going to be joining us later on in the next hour with Molly and myself to discuss the company's green hydrogen ecosystem strategy. But when you're looking at that stock, up about 5.3%, so on pace, it was actually closed at its best day since October 10th, but the company is forecasting a rise in revenue to roughly $6 billion, Molly.
And over in the decliner space today, in some not as clean energy, looking at Exxon buying Pioneer Energy for $60 billion in an all-stock deal. Exxon shelling out $253 a share for this. It's going to make Exxon the biggest player in the Permian Basin. So shares down about 3.8% to end the day on that mega M&A deal. Going to Birkenstock next, IPO day for them. This was the big debut that a lot of people were looking toward, especially because we've had some mixed performance in some bigger IPOs lately. A lot of people really looking to this one to see if it can set the tone for some other companies that might be waiting in the wings to go public. Unfortunately, not such a great day for Birkenstock, falling, let's see, about 12.4% to start the day. Not the best debut for the sandal company there. And taking it over to the Ozempic effect, as we've been talking about, on some of these kidney dialysis makers. So Ozempic was found to be pretty effective in a kidney failure study. So all of these dialysis makers like DaVita, that's the one I'm looking at today, were not doing so well in reaction to this. So DaVita closing the day, that one was down over almost 17%, Romaine.
All right, let's get a quick check of the yield market here on the day. It was an interesting day in Treasuries. We continue to see a bid come in to Treasuries. That's partly, I guess, on haven demand, if you will. That actually pushed yields down lower pretty much across the curve, with the outlier being the 2-year yield, which did tick up higher by about 1 to 2 basis points. We should also point out, though, a lot of the price action really did shift around 1 p.m. here in New York when we had that latest 10-year note auction, which tailed once again here. So we're continuing to see weak demand, particularly for some of those longer dated sales that the Treasury is doing. A ratification, I think, of the idea that investors are indeed demanding a bit more yield to step up to the plate here. And of course, that's going to be a big focus as we head into another big data point tomorrow with CPI. And of course, as everyone looks ahead to the big Fed meeting at the end of this month. But before we get there, guys, I just have to go back a little bit. I want to talk about Birkenstock because I mean, this was a bit, I mean, you laugh. I mean, Scarlett's, I found out this yesterday. She's a big fangirl of Birkenstock. Apparently she has like 18 pairs of Birkenstocks.
Oh, wow.
Including
Really?
Minus 10. Okay, I might exaggerate a little bit, but she loves them. And look, I don't think anyone doubts the power of this brand and its name recognition, but this was like one of the biggest flops in terms of the actual trading flop, meaning on the first day of trading that we've seen in a couple of years. And it really makes the question here whether this was specific to Birkenstock or maybe a broader concern here about some of these IPOs coming to market.
Or maybe just bad timing. You have a lot of question marks over the health of the consumer going forward. Yes, Birkenstock has done really well in its financials, but it's counting on being able to build on that momentum at a time when the consumer is getting more and more stretched and the bite of inflation is affecting spending patterns.
Yeah, Bailey Lipschultz on our U.S. equities team, one of our star reporters, pointing out how when it came to this IPO, pricing at the midpoint of that particular range, whereas a lot of the other gangbuster IPOs recently were at the higher end. So really, what does that tell you? And to your point, Romaine, whether this is more exclusively toward this particular company or if this is a sign more broadly about what potentially could be to come here.
Yeah, and obviously, you know, we had mentioned this was not a great day for the investors here in Birkenstock, but was a very good day for the brothers who are of the family business. So a nice $3.5 billion, I think that was it, probably payout for them today. So Romaine, pretty good if you were a Birkenstock brother today.
Yeah, I mean, they did well, and they're walking away with their, $3 billion. I don't know how they split that up. Did they do it 50-50, or are they like regular siblings?
That's a great question.
And they're just going to squabble over it for the next, 5 years. In all seriousness, though, we talk about the market opening up, meaning, and because this isn't just about IPOs in general, this is also about a lot of those private equity and private capital companies needing an exit plan. And if there is an on-ramp there for them, or off-ramp, if you will, I guess, to come to the public markets. I mean, because let's face it, this was actually a successful IPO, meaning what they sold to their investors here and what they got. Now, the secondary trading, of course, was awful. So there's a sense here that you can still price something and price it aggressively. And I guess, like I said, if you get your money, I mean, what does it matter if it flopped, 10% on the first day?
At this point, right? Because everyone else who needed to get paid did get paid. That's a good point. I go back.
Are all your Birkenstocks the same color, Scarlett?
No, they're all, I have a lot of metallic Birkenstocks.
Metallic?
Yeah.
Cool.
I have silver
They're
ones.
fancy.
I have like a bronze one, a pewter one.
A pewter or pewter?
Yeah, pewter.
Oh, pewter.
Yeah.
Oh.
Sneakers. I have a lot of sneakers.
I just wanted to point out, I know we're looking ahead to CPI for tomorrow morning, but I wanted to point out again, tomorrow's actually the anniversary of the one-year low for the S&P 500 bottom. So in that span, it's up about 22%. So that's something else I'm keeping my eye on.
Why do you keep, you've brought this up before.
Yes, I brought it up last
And it sounds ominous every time you bring it up.
It's not, it shouldn't be ominous. I'm just saying, hey, it's been 1 year.
Okay, I don't know. I don't know if you wanted to make a call.
Oh boy, I'm not going to make a call on the stock market here, but I'm just probably thinking about, like we'd said, there are a lot of other companies that are looking to how this IPO did and if they're going to come out next. I mean, I think a lot of us probably like those leggings, Vuori, from the athletic wear maker. What are they going to do next? We've got Game Change Solar maybe waiting in the wings. So who knows? They might be a little nervous to test the waters after this one.
Yeah, I like those Vuoris. They're really comfortable.
Real nice.
Yeah, they're soft. Yeah. All right, that does it for our cross-platform coverage of the market close on Bloomberg Television, radio, and YouTube. And a reminder that Bloomberg Business Week is now on Bloomberg Originals. We'll be back tomorrow at the same time, same place.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio.
Jess Minton and Molly Smith here in the Bloomberg Interactive Brokers studio, coming out of that simulcast here. And so obviously, Molly, as you know, there's been so much going on here as far as when it comes to the conflict in the Middle East and the developments that have been happening there. And obviously, we've seen rippling effects when we're looking at some of these global markets. Obviously, oil prices looking, of course, as you know, the bond market was closed on Monday. So that was going to be interesting to see as we got further into the week how things were going to shape out. But you're looking more kind of broadly at the U.S. stock market, still holding in there and pretty resilient, but also kind of the latest updates here. Secretary of State, of course, Antony Blinken departing for Israel on Wednesday as part of this U.S. push to show support for Israel. But looking ahead and getting another update on this, we're going to continue to kind of monitor what's happening when we go through all of this. And also, of course, when you're thinking about Benjamin Netanyahu forming a rare emergency government with the opposition to see through the war, and also attention growing so closely to the fate, of course, for these hostages that have been taken with Hamas and what will happen to them if Israel attacks. So a lot of developments here, Molly, when we're keeping a close eye on all of that. But something in particular, I mean, when you're speaking with your sports sources, especially on the economic side of things, because geopolitically, there's been a lot going on when you're looking at, say, the U.S., as well as those tensions with China and sort of the trade-related issues there. But then also we still have the war with, obviously, Ukraine between Russia as well. And then you add this other layer with that. I noticed that Deutsche Bank actually had a call for a potential recession in the first half of next year. But when your sources and you're speaking to them, what are they kind of telling you as far as when it comes to particular levels of conflicts like this? How does that change the landscape in their view for as far as where they think the global economy could potentially be headed?
I think for this one in particular, the biggest market takeaway so far, looking at just how how the trade has been shaping up in the U.S. has been this relief rally in treasuries. And remember, we're coming off of a week or so here where longer dated treasuries really just got hammered, looking at that 10 and 30-year part of the curve where there were a lot of concerns here about interest rates staying higher for longer, and oil also getting a bit wrapped up in that trade as well. But people were really looking for where can we hide out? Where are the havens right now as this conflict risks intensifying? There's concerns, what if Iran potentially gets involved and it could escalate? What does that then mean for oil prices? So a lot of macro movements here, but at least for now, getting a bit of a relief rally in the treasury market out of this.
All right, well, joining us now on Zoom is Galit Alstein, who is a Bloomberg News economy and government reporter here with an update on the Israel-Hamas war. Can you break it down to us? Just give us the latest as far as what do we need to know right now and what is happening?
Yes, hi. So good night, I'm from Tel Aviv. So actually, I would say a couple of things are happening. I think in a way the most significant development news-wise today was the formation of a new government in Israel. It's not exactly a new government. It's the former government led by Benjamin Netanyahu stays intact, but he has been joined by an opposition party that is led by Benny Gantz, who's a former defense minister. So now they have put together a new war cabinet that is going to, in fact, lead all future military operations. This is interesting because, as you probably know, Benjamin Netanyahu has led a government that had some coalition parties that were very far-right, very nationalist,
nationalist and quite extreme in many ways. So this kind of sets these parties aside as far as running the military operations and brings other players into the field instead.
So Galit, you're coming to us right now from Tel Aviv, correct?
That's correct.
Right. So tell us a little bit what it's like on the ground right there. Obviously, this is, the real main, war zone, so to speak, is in the Gaza Strip. But how are things from where you sit right now?
Right. So I have to say that I think the center of Israel, Tel Aviv included, has been relatively quiet today. And over the last few days also, in the sense that, Israel is being targeted by missiles that are being launched by Hamas from the Gaza Strip. But these missiles are threatening mostly the southern vicinity of Israel. And as far as all the other parts of Israel are concerned, like the center of Israel and the north of Israel, so they're less under this missile threat at this time. I mean, you can get a missile alert maybe once or twice a day, so that's not normal, right? But when you compare it to what is going on in the south of Israel, that is constantly bombarded by missiles, then it is manageable most of the time. Obviously, the main arena now is the Gaza Strip that is being very, very heavily bombarded by the IDF. These are unprecedented aerial attacks. And we've heard an IDF spokesperson say just earlier this evening that, they've hit thousands of targets in multiple, locations in the Gaza Strip. And he did say that they now assess that Hamas is starting to lose his grip of the Gaza Strip and his ability to run things there as the ruler of that area.
Just anecdotally, since you are in Tel Aviv, what do you think is maybe not getting talked about or discussed enough at this point, maybe more broadly, that should be?
It's a very good question. It's a very interesting question. I would say that in a way, maybe, the aftermath of what happened on the Saturday incursion, because I think that in real time, as things were happening on Saturday and as reality, was just, unfolding on Saturday night, maybe even Sunday morning, I think we still didn't know a lot of what had happened. It took, I think, almost 48 hours to get control back of all the places that were seized temporarily by attackers from Hamas. And I think that only, yesterday and today, we're starting to get the real testimonials, and we're getting some journalists are getting to go down there and see, for themselves what had happened and meet the people. When I say go down there, I mean go to the south of Israel where everything happened. And I think that, that is likely being pushed aside maybe by news developments, like the politics, like, the military operations that are obviously important in themselves. But I think that there's still a lot to be said on what happened last Saturday. I'm talking about the intelligence failure. I'm talking about the human tragedy of everything that went on there and so forth. So I think that's what I would say to answer your last question.
So speaking to that human tragedy, Galit, obviously the loss of life being the most really unfortunate one there, but we also have this really serious hostage situation. Can you tell us about how that's going to shape Netanyahu's response and how retaliatory the government really can be?
So it's kind of a mystery because we're hearing a lot on that, and we're hearing quite a few people, not officials, I have to say. These are all analysts and talking heads in various media outlets, but some of them have vast experience from the past, but they're not currently officials that are in a specific grow. And they're saying that Israel is, as hard as it may be, is not going to be able to retaliate while taking into consideration, the fact that Hamas is holding so many hostages.
Right.
And I have to say that at this point, and this is my own take, but I have to say that at this point, it doesn't look like it is taking that into consideration in terms of, the fierceness of the attacks.
Well, we'll have to leave it there, but we're definitely going to bring you back soon. Galit Alstein here, who is a Bloomberg News economy and government reporter with an update on the Israel-Hamas war. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. Birkenstock stumbled in its first day of trading. Birkenstock holding shares fell 12.6% in the company's $1.48 billion IPO in a debut that could cool what has been a fledgling rebound in U.S. listings. Again, Birkenstock shares down today by 12.6%. The Dow, the S&P, and NASDAQ ended the day with gains. Stocks extended their rebound from oversold levels as traders shrugged off a hotter-than-estimated inflation reading to focus on less hawkish comments from Fed speakers. S&P today advanced 18 points. That was a gain today of 0.4%. The Dow was up 65 points, up by about 0.2%. NASDAQ up 96. That was a gain of 0.7%. 10-year yield 4.55% with a 2-year at 4.98%. Gold up $14 the ounce to $18.74, up 0.8%. And West Texas Intermediate crude oil down 2.6%, $83.70 for a barrel of WTI. ExxonMobil is buying Pioneer Natural Resources for $59.6 billion, the supermajor's largest takeover in more than 2 decades, as it seeks to become the dominant producer of shale oil. ExxonMobil shares today dropped by 3.6%. Pioneer Natural was up by 1.4%. Recapping, 10-year yield 4.56%, S&P up 18, up by 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it, Jess Mitten. And of course, Molly Smith here. We're both in for Carol Massar and Tim Stenovic, who will be back tomorrow from California. But just real quickly, Molly and I wanted to read off this hot headline crossing the terminal. Microsoft receiving demand for a $28.9 billion from the IRS in back taxes. If you check out that stock after hours, though, ticker symbol MSFT, only down about 0.1%. So we'll keep you posted on the latest developments with that. But of course, switching gears now to another important topic, Molly Smith, the green hydrogen economy. A little bit different. I know you and I cover the economy as well, but this is a particularly nuanced area. But the green energy transition is gathering momentum with governments and industries worldwide looking to address climate change while bolstering global energy security. So is green hydrogen the fuel of the future? Plug Power, a hydrogen fuel cell manufacturer, has been making deals across the world to create massive green hydrogen factories using electrolyzer technology with machines used to make green hydrogen. Joining us to break down the company's green hydrogen ecosystem strategy is none other than Andy Marsh, President and CEO of Plug Power, joining us on Zoom from upstate New York. So Andy, thank you so much for joining us both. I want to start off with, can you just kind of set the scene here and talk to us about what is the green hydrogen economy and how exactly does your company fit into this?
So the green hydrogen economy is really important for climate change. And let's just talk about, you mentioned mobility, but if you look at industrial applications, which represent 26% of the carbon footprint in the world, the only real solution to that is green hydrogen. And Plug today not only has the devices that take water and renewable electricity and creates green hydrogen, but also is a company that's building out nationwide a green hydrogen network here in the United States, as well as projects around the world in Antwerp in Belgium, as well as 850 tons per day of green hydrogen in Finland over the next 4 or 5 years.
So Andy, there was this this symposium that you guys had that I wanted to ask you about, the Plug 2023 symposium. That is this hybrid event that you hosted. Was that today? I think it was.
It was today.
Tell us about it.
It was, we had today folks from, it really is, and you mentioned it was a hybrid event. We spent about half the time bragging about Plug, but we actually bring about half the time bringing together customers, government officials, industry experts, universities to really discuss the future of hydrogen and fuel cells. We had the event today. We had 2 really fascinating announcements. One is in Australia, where we are partnering with Fortescue to do 550 megawatts of electrolyzers, as well as building plants here in the United States with them for green hydrogen. We had another exciting announcement to Arcadia in Denmark for sustainable aviation fuel. But this afternoon, there were 18 breakout sessions looking at energy transition, different applications for fuel cells, as well as the profitability of this industry long term. We had over 150 people here, And I think I'm a little shortchanged because it was packed beyond our number of chairs, as well as over 2,500 digital viewers in the morning.
So who exactly comes to that particular event? Are there particular executive and companies that tend to attend?
Sure. So you see, as I mentioned, a wide variety. So, for example, we had UC Irvine here, Dr. Jack Brower, who runs the fuel cell, who's director of the global fuel cell activity there. We've had people from Tyson Foods. We had people from Fortescue. We had people from throughout the industry. Amazon was here. So we had lots of customers here. We had government officials from New York and West Virginia here, as well as other states. So it's really a opportunity for us all to sit around and talk together about the direction of this industry.
Yeah, you mentioned Amazon as a customer. I think Energy Vault is another. Can you tell us what exactly you sell to them?
Oh, sure. We sell a variety of items. We sell hydrogen itself, and more and more green hydrogen as our green hydrogen plant in Georgia will come online. We're providing hydrogen as a fuel. In Europe, we have deployments going on with our JV with Renault Hyvia for doing last mile deliveries with a vehicle that was which is homologated in Europe between ourselves and Renault. We have forklift trucks in distribution centers, over 60,000 of them to date. We've built over 200 hydrogen fueling stations for them. Those activities with those big customers are probably some of the best kept secrets in the world.
And tell us why, maybe without spilling, the big secrets here, but tell us a little bit, why does Amazon want hydrogen? What's in it for them?
Sure. So let me take a step back. There's a value proposition. And the value proposition with Amazon is they can move more goods faster by using fuel cells versus batteries. Whether it's in a vehicle, you can charge it faster, you can fill it up like a gas tank in minutes, not having to wait hours. So you don't have to waste time with your assets sitting for a battery charge. They have goals for their carbon footprint, which Plug Power helps them achieve. So a combination of those items, plus the fact we're looking at stationary products, about how hyper data centers in the future. Last year, you may have seen some of our announcements with Microsoft, where how you turn data centers into not only having diesel generators to back up the buildings, but using hydrogen and fuel cells, which actually provide power when the grid pricings are higher, much like peaker plants today for natural gas turbines. So we make them green, we do it cost effectively, and we help their core business of moving goods faster.
Molly and I were actually chatting about, ahead of this segment, we were talking about the green hydrogen economy. And of course, because she and I cover the Federal Reserve and obviously the economy and the stock market, and trying to kind of make sense of how does this play into where the global economy is headed. I know a lot of people focus on sort of the path to net zero by 2030, but your view when it comes to climate change and the global economy, how do you see that right now? And how does that fit into the global economic landscape?
Sure. So folks at Bloomberg actually believe 20% of the world's energy by 2050 will be green hydrogen. And when I look at it, the path between now, and I'll just use Europe as an example. On Monday, Europe passed 27 nations agreed, which I find an amazing fact, with the Renewable Energy Directive, which is looking to have over 10 million tons a year of 10 million tons a year of hydrogen internally produced by 2030, which would use our products like our electrolyzer products, as well as use hydrogen from plants we're building, and another 10 million tons imported into Europe. So and when Europe set those goals, 42% of that hydrogen has to be green. So, you take a look and say where it's going, but you also seeing governments in Europe much more of a stick approach, saying companies have to do this. Here in the USA, obviously we have the IRA where the regulations are being finalized for hydrogen. which I know the government's working diligently on at the moment. And I think that'll be really beneficial to accelerating green hydrogen deployments here in the States.
Hey, you brought up the government. I just want to quickly, because we only have about 20 seconds left, the Inflation Reduction Act, how does that impact green hydrogen industry?
Significant. There's a $3 tax credit for green hydrogen. Government's working as hard as can be to make sure those regulations are right. We've been supporting the efforts, and I've been really impressed with their knowledge. And, you know, I know some folks are complaining and wish it was done now.
Right.
The fact of the matter is they're working to get it right, and I support the efforts they're doing.
All right, Andy Marsh, CEO of Plug Power, joining us here with Molly Smith and myself on building an end-to-end green hydrogen ecosystem. We'll have more coming up, but first, let's get a check on the latest world and national news with Nancy Lyons in Washington, D.C.
Thanks, Jess. Republican members of the House have nominated Steve Scalise as their new Speaker. Scalise, currently House Majority Leader, spoke after coming out of a closed-door meeting today where he emerged as the favorite.
First, I want to thank my House Republican colleagues for just designating me as the Speaker. Obviously, we still have work to do. We're going to have to go upstairs on the House floor and resolve this and then get the House opened again. We have a lot of work to do.
It's unclear when a House Speaker vote will happen. It's not likely before tomorrow. Scalise's main rival for the job, Jim Jordan, has offered to make a nominating speech in support of Scalise on the House floor. Secretary of State Antony Blinken is heading for Israel to show U.S. support and to determine what Israel needs in its war against Hamas. Blinken's also expected to investigate the fate of Americans still missing. National Security spokesman John Kirby says that number right now is 17.
I think we all need to steel ourselves for the very distinct possibility that these numbers will keep increasing and that we may, in fact, find out that more Americans are part of the hostage pool.
Kirby says the U.S. has not received any proof of life regarding the suspected hostages. President Biden announced a proposed rule by the Federal Trade Commission to ban any hidden or so-called junk fees that mask the total cost of concert tickets, hotel rooms, and utility bills. Biden says these extra charges take a toll on middle and lower income families.
These junk fees can add up hundreds of dollars, weighing down family budgets, making it harder to pay family bills. These junk fees may not matter to the wealthy, but they sure matter to working folks in homes like the one I grew up in.
Some business groups worry the proposal could lead to fewer choices for consumers. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
Thank you, Nancy. Let's go to Washington as President Biden visits with the Jewish community leaders and delivers remarks on his support for Israel.
Overall issue of anti-Semitism. And I know many of you are personally impacted by what's happened in Israel. There are thousands of dual citizens, maybe some of your relatives that are there. And Doug, I want to thank you for all the work you've done on behalf of our administration to combat anti-Semitism. And I apologize, I've been on the phone around the clock with our friends around the world, quite frankly, discussing what's going on in Israel. And I want you to know that I want to thank you as well for all of you as well for working, the work you're doing to bring comfort and in this moment of grief for those of you who are grieving as well. And you'll read this weekend in synagogue, the Torah teaches us that God made stars to, quote, give light on the earth and separate light from darkness. Give light on the earth and separate light from darkness. You know, it's been hard to find that light during the darkness of these past few days. When terrorist groups like Hamas brought not only terror, but sheer evil to the world, evil that echoes the worst and matches, in some cases exceeds the worst atrocities of ISIS. More than 1,000 civilians slaughtered in Israel. By the way, I've been speaking with a number of Israeli leaders, a number of leaders around the world, leaders in the region as well. And, you know, among those who have been victimized, this evil, who've been killed, are at least 22 American citizens. This attack was a campaign of pure cruelty, not just hate, but pure cruelty against the Jewish people. And I would argue it's the deadliest day for Jews since the Holocaust. The deadliest day since the Holocaust. One of the worst chapters in human history that reminded us all that expression I learned from my dad early on, silence is complicity. Silence is complicity. It really is. And I want you to know, I think you've already figured it out, I refuse to be silent. I know you refuse to be silent as well. I know you're here with my senior staff. You all represent a voice that America has to hear. America can't be silent. You know, we not only reject terrorism, but it goes beyond that. It goes beyond rejecting terrorism. You know, I spoke with Prime Minister Netanyahu for I don't know how many times, but again this morning. And already we're surging additional military assistance to the Israeli Defense Force, including ammunition, interceptors to replenish the Iron Dome, and we've moved the U.S. carrier fleet to the Eastern Mediterranean, and we're sending more fighter jets there in that region. And made it clear to the Iranians, be careful. We want to make it real clear. We're working on every aspect of the hostage crisis in Israel, including deploying experts to advise and assist with recovery efforts. Now, the press is going to shout to me, and many of you are, that, you know, what are you doing to get these folks home? If I told you, I wouldn't be able to get them home. Folks, there's a lot we're doing. A lot we're doing. I have not given up hope on bringing these folks home. But the idea that I'm going to stand here before you and tell you what I'm doing is bizarre. So I hope you understand how bizarre I think it would be to try to answer that question. In the days ahead, we're going to continue to work closely with our partners in Israel and around the world to ensure Israel has what it needs to defend its citizens, its cities, and to respond to these attacks. As I said yesterday, my commitment to Israel's security and the safety of the Jewish people is unshakable. The United States has Israel's back, and I have yours as well, both at home and abroad. You know, you can see the pain in some of your faces. I walked into this room. You okay, kiddo? Well, your fear for family, friends back in Israel. You worry about kids being targeted in school, about going about their daily lives. You're hurt by the downplaying of Hamas's atrocities and blaming Israel. This is unconscionable. And I've asked members of my team, including Homeland Security Secretary Mayorkas and Attorney General Garland, to work intensively with our Jewish community partners so many of you here to set up security around Jewish life in America, identify, prevent, and disrupt emerging threats that occur. You know, we're also going to continue to condemn and combat anti-Semitism at every single turn, at every turn. You know, the past few days have been a solemn reminder that hate never goes away. Hold on a second, I used to think you could defeat hate, that you could make it, all it does is go underground. It just goes underground, it doesn't go away. It only hides until it's given a little oxygen, a little bit of oxygen. And that's why I've secured the largest ever increase in funding for physical security for nonprofits, including synagogues, Jewish community centers, Jewish day schools. And in May, we released the first ever national strategy to counter anti-Semitism with the input from many of you in this room. Many of you in this room helped write that. It's the most ambitious, comprehensive effort to combat anti-Semitism in American history, in all of American history. And we're aggressively implementing it. But we must all do our part and forcefully speak out against anti-Semitism and push back against the attempts to deny or distort the facts. To make clear, there is no place for hate in America. Not against Jews, not against Muslims, not against anybody. And we mourn the act you and so many leaders have across the country, showing us what thousands of years of Jewish history has shown us. The enduring strength, and I mean this sincerely, the enduring strength and spirit of the Jewish community. If you excuse a point of personal privilege, you should say in the Senate. That's why I took my kids, everyone when they turned 14 years old, one at a time, put them on a plane and took them to Dachau. I wanted them to see that you could not know what was going on walking through those gates. You could not fail to understand as a country what was going on. And that's a fact. It had a profound impact on my children and my grandchildren. Some thought taking a 14-year-old grandchild was not a mistake, but I took them one at a time. I got 3 more to go. And folks, it's important. You know, the miracle of Israel is Israel. It's Israel itself. The hope it inspires. The light it represents to the world. And folks, I was asked in one of my very frank conversations with Bibi and with Herzog. So why do I feel so deeply about this? It's not about the region. I truly believe, were there no Israel, no Jew in the world would be ultimately safe. It's the only ultimate guarantee. The only ultimate guarantee. The only ultimate guarantee. And folks, because of you, and I mean this sincerely, because you're speaking up, because of the intensity and the intellect and the brilliance you bring to this cause, I think we have a chance to end this in a way that is, it makes it very difficult for it to be repeated. I want to thank you for your leadership. And as I said, there's a lot to talk about. And, but I'm really, quite frankly, concerned as to, it's hard to talk about this without detail. And it's contrary to our interests to let out the detail of what we're going on. I mean, this is just round the clock, as you understand. You fully understand. But, you know, I've known Bibi for over 40 years. In a very frank relationship. I know him well. And the one thing that I did say, that it is really important that Israel, with all the anger, frustration, and just, I don't know how to explain it, that exists, is that they operate by the rules of war. The rules of war. And there are rules of war. And I believe Israel is doing everything in its power to pull the country together, stay on the same page, and we're going to do everything in our power to make sure Israel succeed, and God willing, to bring home those Americans who are in harm's way. I'm going to let you all have the private conversation you've been having, which you should continue to have, but I just came to basically, I really mean it from the bottom of my heart. I give you my word as a Biden. Thank you. Thank you for the intensity of your support. It matters. It matters that Americans see what's happening. I mean, I've been doing this a long time. I never really thought that I would see and have confirmed pictures of terrorists beheading children. I never thought I'd ever, anyway, but there are countries in the region that are trying to be of some help, including Arab nations that are trying to be of some help. So, anyway.
Mr. President, where do you draw strength and inspiration in these troubling times?
From my faith. From my faith. My faith that at the core of every human being is a spark of humanity and decency. It's got to be touched. It's got to be spoken to. That's what you do. That's why you're here. It's not about, revenge. It's about decency. Just basically decent, just basic decency. Treating people with a sense of, I don't know quite how to say it, but I know we can overcome this. I know we can overcome this. Look, I don't know anything about the kind of losses talking here, but I know a little bit of like to feel loss, lose people you adore, get a phone call saying they're gone. I get that part. Not the same, but I get the part. And what I've learned is that as we persevere, we can grow. And the day will come when the memory of that person or those persons bring a smile to your lips before it brings a tear to your eye. It will happen. It will happen, but God, it takes a long time sometimes. And when it's born out of something that has been anything from a mistake to a vicious intent, it varies in degrees. I'm not saying I know the same, but I just, look, I'll never forget, well, I won't go into that. Anyway, I just think that if we stay true to our values, pursue with every inch and every bit of our energy to get this right, we can bury this again and bring people back, and bring people home and bring it together. I think we can change the Middle East. But then again, I have been referred to as a congenital optimist. And I'm not going to answer any questions from you guys right now, but my team here knows when the press is gone, they'll talk more directly to you. But even then, they're not going to be able to tell you all that we're doing and all that's going on. So.
Question, sir. May we please say thank you. 80 years ago this week, a group of 400 rabbis came to Washington, hoping to meet with Franklin Delano Roosevelt and appeal to him to act to rescue the Jews who were being persecuted in Europe. And they were refused a meeting with President Roosevelt. They were refused entry to the White House. And the fact that we are here today, and you have spoken as the President of the United States so clearly in support of Israel, so clearly in support of the Jewish people, and welcome leaders and representatives of the Jewish community into the White House for this discussion, shows what a dramatic distance we've traveled in these United States, how we as the Jewish community are blessed to live today in these United States, and we thank you for your leadership and your moral clarity.
All right, that was President Biden delivering remarks to the Jewish community leaders on his support for Israel. Biden saying that silence is complicity and that he refuses to be silent and that there's no place for hate in America. He added that the administration made it clear to the Iranians to be careful and that his administration has not given up hope of bringing hostages home and that the U.S. is sending more fighter jets to the Middle East region. We'll continue to monitor the news in the Middle East and we'll have more updates and breaking news coming up. Now let's get a check on the latest business news with Charlie Pellet.
Thank you very much. It was an up day for the Dow, the S&P, and NASDAQ today. S&P higher for a fourth straight session, advancing 18 points. The S&P at 43.76, up 0.4%. The Dow Jones Industrial Average up 65, up 0.2%. NASDAQ higher by 96, a gain today of 0.7%. 10-year yield 4.56%. The 2-year 4.98%. Gold up $13 the ounce to $18.73. Crude down 3.1%. 83.32 a barrel on West Texas Intermediate crude. ExxonMobil buying Pioneer Natural. ExxonMobil down 1.6%. Pioneer Natural up 1.4%. First day out for Birkenstock, it was down 12.6%. And that is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it, Jess Minton. And Molly Smith here in for Carol Master and Tim Stenovic, who do have the day off. Now, Molly, I'm not sure about you if you're planning any sort of holiday travel plans. When I think about last year, it was pretty chaotic, but it's coming up sooner than we may think.
Yeah, and I think we got to get really on it. You know, our next guest is going to tell us all about this, but you really need to start thinking right now if you are going anywhere for Thanksgiving or for Christmas.
For sure. And according to the experts at travel booking site Hopper, they are recommending booking Thanksgiving and Christmas travel no later than October 14th. So if you do look at the calendar, Molly,
Saturday.
that's just days away, right?
This is stressing me out.
Exactly, in order to basically try to score a good deal this holiday season. So who better to join us right now? Haley Berg, lead economist at Hopper, joining us on Zoom from Boston. Haley, thank you so much for being patient and joining us and sticking with us here. Now, break it down. What should we expect to pay for the holiday travel season this year?
Right now, airfare for Thanksgiving is hovering around $270 for a domestic ticket that covers the Thanksgiving dates. And that's down about 14% from last year. So the good news is if you traveled for Thanksgiving last year, you should expect to pay a little bit less. The same is true for Christmas. Christmas is always a lot more expensive than Thanksgiving. It's averaging about $400 per round trip domestic ticket for this Christmas season, but that too is down from last year about 12%. So though there might be a little bit of sticker shock coming off of a big travel summer, these prices are actually a lot better than what we paid last year.
So then, Haley, does that mean, are you expecting this to be a pretty busy season then in terms of travel?
Absolutely. Absolutely a busy travel season. Last year was the first holiday season where travel was fully open post-COVID. And this holiday season is where we're going to see international travel really come back to pre-pandemic levels. So we're expecting that domestic traffic will be high as folks head home for the holidays, but we'll also see a lot more travelers heading on international routes for some of those bigger bucket list vacations that stretch over time off at the end of the year. So definitely expecting a busy holiday season, and that will drive up last minute prices, but prices are still pretty good right now.
Okay, so tell us, what are the cheapest days to book and when to go?
Booking wise, you want to book now. Two reasons. One is prices are on average about as low as they'll go before both holidays, Thanksgiving and Christmas, today. Prices will start to rise after this weekend, slowly at first, but then they'll really ramp up at the last minute. So you'll want to book now, both because of price, but also availability. It'll be a busy season. Flights will sell out. The best way to find a really great deal at the holidays is to fly on those less popular dates. You can save about 40% off of your Thanksgiving airfare just by skipping the Sunday return flight. Try to come back on Monday after the holiday weekend. Same goes for Christmas. Try to skip those most popular dates like Thursday and Friday before the holiday weekend, and you can save anywhere from 20 to 40% on your airfare. So fly on the dates that you think fewer people will be flying, those less popular dates, and you can really pack on the savings.
You know, those are the days I would think are less popular, but I feel like the, hybrid work here has changed a bit of that, right? Because a lot of people now, they can work from home that Monday or Friday, maybe can fly, those like Thursday night or Monday night flights that you said would usually be less popular. But is that still the case, would you say?
Prices are still low for those off-peak dates, but you're absolutely right that we are seeing some shifting of travel preferences with the normalization of remote work. Definitely among Hopper users, our users are typically Gen Z and millennial who tend to have a lot more flexibility, are open to being more flexible in when they fly or where they fly. So we definitely see some shifts beginning in when people are traveling. But the reality is a lot of Americans do need to either have their kids in school or be at work and won't have the flexibility to fly on a Wednesday before Christmas and come back the following Wednesday. They'll live more by those traditional schedules. So though we see some shifting trends there, on the whole, the most popular dates for holidays throughout this year, especially the end of this year, have remained pretty much the same to what we usually see.
We've heard from airliners in the recent past 2 months end up cutting their outlooks for the third quarter just because of how they were impacted by higher fuel costs. We will hear from Delta Airlines reporting results in the morning. How much of a threat when you're thinking about higher fuel costs when it comes to airlines and potentially pushing up the costs for travel fare when it comes to buying those tickets are you worried about in the next coming months?
We have been worried about jet fuel for the past 3 or so years, it seems. It has been so incredibly volatile. But really what we've been thinking about, especially from the consumer perspective, are two things. One is we really need to see sustained and significant increases in jet fuel prices for consumers to truly feel those in their wallet. Airlines pass on a proportion of those jet fuel increases to travelers, but there are a number of other factors that are going into pricing. Demand, even the plane that's operating on the route, it all goes into, the efficiency of the fuel, how much it actually costs, and how much that's passed on to the consumer. So we would be looking for a really sustained increase. Fuel prices have plateaued. They have increased in the last 3 months or so, but have plateaued in the last couple of weeks. So we're hopeful that the holiday season will be protected, especially if travelers book now. But if we see any sustained increases into next year, we may see slight uptick in prices. I would expect long haul routes would feel the impact a bit more than domestic.
So Haley, when you're saying, though, that you still think this is going to be a really busy travel season, I mean, that to me just sounds like the consumer is really strong. And obviously we've had, that really is the bone of the economy right here. So what does that then tell you, maybe not just for the, fourth quarter outlook, but looking a bit further ahead and how, resilient the consumer is right now?
Travelers have been incredibly resilient in the last few years. And I think something that we're really seeing mature is these younger generations and their prioritization of travel expenditure. Millennials, Gen Z, the millennials are now in their early 40s. They've built wealth and they consistently prioritize expenditure on travel, even as they tighten their belts. And I think we're seeing the result of that, even as we head into, the fourth quarter of this year with holidays, lots of spending ahead, and, consumers still concerned about the economic outlook. We expect to continue to see travel being prioritized, not just from these younger generations, but they're certainly leading the charge. And that gives us a lot of, positive momentum headed into 2024. And we're expecting, another strong holiday season, but also expecting to see strong signals for spring break and summer 2024, especially to some of these destinations that are new and trending and interesting among the younger generations.
Hey, Haley, we only have about 15 seconds left, but to Molly's point, do you really think we're headed for a recession with what you're seeing with travel?
When it comes to travel, people are going to keep spending. That's what we're expecting and what we've learned in the last couple of years. So we'll see about the rest of commodities, but I think travel is one that will continue to grow.
All right, Haley Berg, lead economist at Hopper on Zoom for Boston. Thanks so much for joining us. We'll have more